Clinton Wilkins and his entourage is in the house, in studio as well as Brenna Charles. And we're talking about when you get that letter in the mail which says, we want you to renew at blank. And Brenna, you this is kind of where you have, well, Clinton has this expertise as well, but there are good reasons why people should perhaps entertain getting another opinion or shopping that around, right?
Absolutely. I think, you get that letter in the mail from your existing lender, and that's almost the flag. Hey, let me talk to my financial advice professional. Let me talk to my broker. Let me talk to Clinton. And then Clinton would, he has a number of sort of, expertise. He has connections with all the lenders and can sort of identify, does it make more sense to move you somewhere else? He'd go through the, application process. So when you do move to a new lender, you do have to requalify. So again, it's typically fairly simple and straightforward. And I know Clinton.
Yeah, we try to make it as easy as possible. Like we talk to people about their income, their assets, and their credit. And, different lenders are right for different people, as you know, and everybody's situation is different. But I can tell you 9 times out of 10 that moving from lender to lender makes a difference and a positive impact for a consumer. We're doing some things that are, maybe just even extending amortizations. Now on an insurable transfer, we can go back to their original amortization. Sometimes people just want to amortize their mortgage over a longer period right now, not even refinance and take out additional funds, but just change their amortization because the rates are high.
Let me ask you this. Do you have to let your existing lender know if you're shopping around?
So I'd say it's almost like a yes-no question. So you don't need to go and say, I'm looking to leave. But what you should do is, typically that lender's going to offer you different terms at renewal. What you want to do is, if you're planning to switch, renew into an open term. And what that does is that gives you the flexibility to leave. Let's say you don't line something up on the exact date of your mortgage matures. If you've gone into an open term, you can still leave that lender without penalty. So again, it gives you a little bit more.
The interest rate's probably high on that open term.
Yeah, their interest rates on an open are high, and some lenders will automatically put you into an open at renewal. But some lenders, we won't name names, but they will automatically renew you into a closed term. So if you don't have your mortgage paid out on time and you're planning to refinance or do a transfer, always put it into an open.
But that said, that's better than people's mortgages simply going into limbo, which could happen.
Yeah, and I think sometimes people ostrich and just put their head in the sand and don't do anything or wait until the end, and that is not good. So like when we're doing a transfer or a refinance and we're using a partner like First Canadian Title, FCT, we like to have our files done at least 10-15 days before that transfer date. But we are at the mercy of the lender that we're paying out to give the payout statement in a timely manner. And some lenders are not giving the payout maybe until 1 or 2 days before that's supposed to be done.
Trying to kind of sabotage the deal?
I don't know. It's just, they have such a workload ahead of them that it just takes that much time to get the document
Probably
together.
On the lowest priority list is sending money out, right?
Yeah.
There's no incentive.
That's not a good time, right? Oh, it's time to pay other people.
When we're funding the mortgage, we want to get those funded on time. I think getting paid out, they're not as excited about. They're not as excited about that.
And then speaking of getting paid out, that's sort of what happens in the process. And when your lender is going to really know that you are planning to leave, either you're going to renew into an open term, but let's say you've made the decision to switch. This is where FCT, we're going to order a payout statement from your existing lender. So if you haven't spoken to them yet, that's when they're going to know. They're going to receive the signed form from FCT, signed by the client, signed by the homeowner, and that's when the existing lender is going to be like, oh, okay, I need to prepare everything to, ultimately receive funds and that get this mortgage paid out. So that's really, from a processing standpoint, there's just one additional form that you need to sign in order to move your mortgage out. Then from FCT's perspective, that's where we'll do all that legal work that I alluded to earlier to actually change the mortgage registration.
Now, on a transfer, we have to use a company like FCT. You can't use a lawyer. But when we do a refinance, you have the choice of either using a company like FCT or a lawyer. So maybe, Brenna, can you talk to us just so our listeners...
On a transfer, you said?
Yeah, so like on a straight renewal. So if there's no additional funds, we're just moving from lender to lender. We have to use First Canadian Title or FCT.
Yes.
A lender like or a processor like that to be able to move.
Because you're moving the mortgage itself, needs to be registered, et cetera, et cetera.
So, but on a refinance, and a refinance would be maybe moving from lender to lender. It could be with existing, or it could be from lender to lender with additional funds. there's a couple
consolidation.
options. You know,
But you still require FCT?
You can use a lawyer, or you can use
see.
a company like FCT. So
I
maybe,
see.
Brenna, just give us a little rundown of like, why should someone in a refinance situation use a company like FCT?
And maybe I'll also even call out why it is today that lenders, leverage FCT on every transfer, and it's actually to reduce or eliminate costs for the homeowner, for the borrower. So that's why lenders have partnered with FCT, and FCT closes all of those transfers. There isn't really an option for lawyers. Now, on refinances, lenders want leave it up to the homeowner, leave it up to the borrower to decide which agency they want to close the mortgage transaction. And this is where homeowners have the option to leverage a lawyer, a solicitor, or a company like FCT. So from FCT's perspective, why we entered this space is, we were looking to fill a gap for, a more consistent, more cost-effective option. So dollars don't go as far as they used to. So we're looking to try to, save expenses where we can. So FCT has a closing program for refinances, so for debt consolidation, where it's one set fee. If clients are paying out multiple debts, it doesn't change the cost of closing for them. So again, as we're looking to, manage our finances, consolidate debt under, a mortgage product, so they're paying lower interest rates, or so you're paying lower interest. Well, the more debts you consolidate, traditionally, that could increase your closing expenses. With our product at FCT, it actually really eliminates those variable costs in closing.
And what I really love about it, and I'm just going to throw it out there because we do business with lawyers and we do business with FCT. There's obviously some files that would need to go to a lawyer because of just complexity, maybe title changes, things like that. But what I really love about FCT is through our channel, you're signing remotely often. So like the signer will come to someone's house and they're doing evenings, weekends, mornings, whenever. Sometimes there's a lot of friction for a customer to go into a lawyer's office. I can tell you a lot of our clients like to come in at 5, 6 o'clock to sign documents with me. It's the same type of thing when you're signing those final documents. I think the real interesting thing, and I know we've talked about title insurance on this show before, Todd, that title insurance cost is all included with FCT. There's none of these other disbursements. I've had clients call me to say, I've heard that I maybe could have used a company like FCT, but we used a lawyer. I just don't understand the whys. And my lawyer bill was, $2,000 with legal fees, disbursements, and title insurance. And I'm just using $2,000 as a round number. But my friend used First Canadian Title, and I understand that it was a flat fee. So just help me understand kind of that difference. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.